Okay, good morning, you beautiful people. It is Friday. We've made it to the end of the week. Now, this has been a super challenging week. I just want to come out the gates explaining and stating and turn my lights on at the same time. This has been one of the most difficult weeks in the last couple of months. Now, I've been spending a bit of time yesterday and this morning really going through the data and just trying to understand what is different in the markets to have caused, some of these misses that we've had. This has been one of the first negative weeks in the last 3 months that we can find in our history. And again, obviously it was a short week. We only had a few trading days. We only had 2 real trading days under our belt already, but it's really down to a simple thing, right? And this comes to the unprecedented dollar strength that we weren't expecting. And a lot of our biases have been set into some dollar weaknesses, right? So a lot of our long-term trades and the trades that we've developed over December have that dollar weakness bias, and we've seen this spike in dollar strength. However, there's some good news, right? So just first, a massive welcome to everybody that's joining us, no matter where in the world you are. Just a massive shout out to you. Now, there's some highlights and there's some goodness in that we actually know and understand where some of these issues lay. I just want to see where the chat is here. I can see, let's have a look here. Well, I can't really see the chat, but anyway, I can see Petunia's in the house. I can see Vanessa in the house. I can see K Lecatle. What's K Lecatle? I'm sticking with it. So we can see where some of the issues lie. So I've gone back the last couple of years and had a look at January specifically, right? And what I found is that in most Januaries, the start of the year, specifically where we've had a decline in December on the dollar value in relation to everything else, primarily looking at the dollar index, we've generally seen that first week of January perform extremely well for the dollar. There's some good news. In majority of those cases, we see the dollar tank almost directly after that. Now, that can be due to a couple things. I'm still diving through some of the data, and this afternoon, by the time we have NFP, I'll have that pretty much down to a science. But what I believe at this point in time is that it's due to a couple things. Some of the fundamental data that comes out in December, that first week, there's no data, right? So the markets are hyped, the dollar's hyped, so the dollar gains value. By the time we get NFP, by the time we get some of that fundamental data that generally proves negative, to employment data, to a bunch of different things being December. And I think that's what drives the dollar into that negative territory after that first week. So we'll dive through this together as we get into NFP data live this afternoon. Now, if you're part of Premium Plus, we are trading NFP live this afternoon. It's not necessarily that we're going to take a trade. We're going to break down the data, look at what the strength of labor, US labor market looks like, and we're going to look for price action opportunities, right? So again, don't get caught out by the hype. There's going to be a ton of Instagram traders advertising, come trade NFP live. If you guys remember that one who has his Ferrari or whatever the case may be, they rented a hall in Cape Town and said, everybody come in, everybody funded their live accounts. And he, before the date's even released, on his golden ball or glass ball, he told everyone to buy US 30 or whatever the case may be, NASDAQ, and it pretty much just sank, right? In his live, he asked everyone, put your hand up, who's still in the trade, and everyone basically just said our accounts are blown. The whole room, like 40, 50 people. You need to understand, when traders start opening their own brokers, are they opening an A or B book broker? If you're opening a B book broker, right, the only way they're making money is if their people they're following blows their accounts. So please don't get caught up in the hype of NFP. NFP, honestly, and if you guys have been following me for a while, most fundamental data events are just hype, right? Price action still prevails. It gets people super excited into a quick movement, and it can be profitable if you know how to catch it. But in most cases, that's not where we make our money, right? It might yield 1,000, might yield 2,000 pips, but in most cases on a day, we make on a single move 1,000. 1.5, 2,000 pips, right? So it's not worth getting into, but it is worth understanding what's happening on some of the fundamental data front, seeing the reactions of the market. And should we get a unicorn, should we get all the data pointing in one direction to strength or weakness, then absolutely we'll take advantage of that. And that's what trading is really about, is being prepared and being present. And should the opportunity present itself, we're able to pull the trigger because we've done all the research, we're prepared and ready, right? It's not about guessing. It's not about whatever crap these Instagram people are doing, right? Anyway, let's jump into it. Let's have a look at what's busy happening in the world before I get carried away. We're going to wrap this one up really, really quickly. There's some articles about what's to expect in terms of the NFP jobs reports, right? So someone's asking, Grant, saying, do you think NFP could be positive? There's a little sticker in front of this thing. I think There's something blocking the chat here from me seeing. So do I think NFP will be positive? I'll talk about my opinions when we get to NFP this afternoon. We break down the data. It's not a guessing game, right? I'll tell you what my thoughts are once we've gone through the data. So in terms of what to expect from the December job report, there's going to be a few articles that are reading about it, but all they're really doing, guys, what you need to understand about these economists is they're basically telling you what the forecasts are saying, right? So at the moment, ignore the article. The forecasts are saying a majority across the board, with the exception of, I think, one area. Let me just see where it was. Unemployment rate, right? Unemployment rate is expected to tick slightly higher, right? Which is expected if less and less people have got jobs, etc. Then that's, where it's going, right? So unemployment rate to tick up to 3.8%. Non-farm payrolls, 150,000. Let's see. I just want to see normal payrolls. Unemployment rate up, average hourly earnings. So expected across the board for the employment sector or the labor market in the US to decrease, right? There's no area here that is increasing. Average weekly hours is the only expectation to kind of remain dead flat, but non-farm payrolls private also expected to decrease. Participation rate doesn't have yet a forecast. Manufacturing payrolls expected also to decrease. So all these articles are just basically saying, hey, right, it is expected, right, for essentially these data points to come down, right? So they're just giving that right there. Now, again, as we've seen with some of these fundamental data points, and specifically with the dollar, we've seen in the past, it can be expected to decrease and it can come in higher. So when we talk about, what is the likelihood of certain things happening, if we see the jobs report or the NFP as a whole, unemployment, etc., we see all these numbers tick slightly more negative to the dollar, for the dollar, meaning lower than expected. The only one that has a inverse correlation is going to be unemployment rate. When unemployment rate goes higher, right, that is negative for the dollar. So that's the only one that's inverse. But if we see those numbers go down, participation rates, average hourly earnings, NFP numbers, this will be negative for the dollar. Now, the economists are already expecting that to be negative. If it's more than that, great, right? We'll see a weakening of the dollar, and then we see a bit of a reinstatement of our previous views. But if we see readings higher than expected, so we see unemployment, let's say, stay at 3.7 or even 3.6, but we see higher readings on non-farm payrolls, on participation rates, on average hourly earnings, those types of things, that'll be very strong for the dollar. And then we'll see a whole completely different shift in the way of the markets. Now, really quickly looking at, what is this dollar strength all about, and why have we sort of been, I would say, caught up in this first week of some of this sort of temporary dollar strength. I'm going to show you guys a chart really quickly. I'm going to show you, where some of our biases came from that dollar weakening. So let's jump into it and let's have a look. We're going to wrap this up really quickly. I just want to show you guys where our thoughts were. So this is the dollar index, right? We've been benefiting, throughout the third quarter of this year through that weaker dollar. We had some temporary strength beginning of December. If you guys remember, the first week of December was a little bit of a difficult trading period, right? Just because of the fact that we, broke through on that dollar strength, we expected that, dollar weakness to continue, and we get times of dollar strength, but then it's expected, right? This is again the dollar index on a 4-hour time frame. That first week of December, we struggled a little bit with price action due to the dollar breaking out, coming in for that retest, and then ultimately tanking. Once that tanking started, we had an amazing month in December, right? We were doing a couple thousand pips a week, all the way into the last week of December, all the way right into just before New Year's, right? And the dollar index continued tanking. Now, the end of the year, right? We closed off the year great, and then we saw on Tuesday that dollar really starting to pump with value, right? We started the trading on Wednesday, and we saw that dollar pump again in value, and that's why yesterday we kind of decided, hey, let's take it a bit easier, let's relax a little bit. Now, I found a parallel level here that's running parallel to this channel, which sometimes happens. Price will break out, make a level, and then obviously come back into structure. But ultimately this afternoon, what we'll be seeing is that if the dollar comes out weaker on NFP, right? So meaning numbers lower than expected, right? This could cause this structure to crash and put us back into money territory. Now, based on what I've been looking at in terms of really reversing and going back, right? Looking at the start of every year back until 2016. Obviously, there was a bit of chaos in 2016, end of 2016. Markets are kind of showing a bunch of weird data there. But in most cases, if we even go into a daily time frame, we'll find that all the way from 2020, that first week of the year is generally quite bullish for the dollar, right? We see that inverse dollar strength. In this particular case here, we had some, bear market structure here, dollar weakening, and then that first week of the year, we see that little bit of a breakout structure. At this point, people will change their outlooks, right? The data will start to change the forecast of what's going on, but that would have led to some price action issues, right? If we go into January 2021, right, you see this massive sort of weakness on the dollar, and then what happens in the first week of January 2021, this inverse and weird dollar strength that just pops out of nowhere, right? If we go to 2022, first week of 2022, let's get in it. First week, so 2022, as we saw with the gold strategy that we practiced as we closed markets up on 2022, or when we showed the last bit of the strength of the dollar against gold, 2022 was the only anomaly, and that proves true as well for the dollar index, right? We didn't get strength there, we got a little bit of weakness, but that seems also like a bit of a price action break. So markets are pretty flat there, just behind my head there. And then the first week of the year, we get that little bit of a inverse move there, which is kind of starting to ring true across the board. 2023, right, again, as we see 2023, we have this massive weakening, right, across the board, and then we get that first week of the year, we get that bit of strength that would have been inverse to what the price action would have said. If you zoom in a little bit closer, we would have seen some sort of price action like that, expecting the opening week to have been weaker, but it came out stronger. So it definitely seems that this week, as we look at these couple days being stronger, definitely proves to be present in the past. I didn't look at that. As we closed up the year last year, we looked at a lot of strategies that were around the closing of the markets, the strength of the markets, etc. That all proved to be true, but I didn't look further into January to really study and understand what did that first week look like. And if I did, I would have probably chose to allow the team a little bit more leave, but we wanted to obviously open up a little bit earlier for a lot of the new members that have joined. So a little bit of a disappointing week, but again, we've only got 2 trading days under our belt. Maybe NFP this afternoon will reveal that weaker dollar for us, which will allow us some opportunities to make back some of those gains. Now, in terms of Bitcoin has recovered back into market structure. I had a lot of questions over Bitcoin in the last few days about this structure in particular. And what I've pointed out is that if we look at the overall distance of the structure, so if we look at, again, how far this triangle can extend to, right, what we see is that this triangle can extend to, on a daily time frame, anywhere from 41 to 42 days, right? Meaning that halfway of this triangle's formation would be about 22 to 23 days. So we're still 50% of that formation. We got a little bit of a fake out. I think it was on Wednesday or Thursday. That's Wednesday. Fake out towards the downside. We're still in that ascending triangle formation. We got a fake out to the top side first, then a fake out to the downside. And now it's really about seeing, what Bitcoin does. It still has today and Monday, technically speaking, between that 50 and 70% formation to make some sort of move. So again, another weakening on the dollar. If that aligns, that will all then also push Bitcoin into that bull territory, right? Again, as there's uncertainty around the dollar, it creates certainty around commodities, certainty around cryptos, and Wall Street just enjoys that weaker dollar as always. So we are in a pretty pivotal moment. It's been a very, very difficult trading week. Again, we haven't seen trading conditions like this in the last couple months, but that is what it is. That's what trading is all about. Now, if you're starting a trading journey, you're seeing these difficult trades, you're really set up for a really great trading season, right? It's always difficult when people join and we're having these absolute winners. We are winning week after week after week, month after month, and people's confidence turns into overconfidence, right? Over leveraging on every trade because we're right most of the time, or majority of the time. And then that 1, 2, 3 trades that don't go their way, they've forgot about risk management. When you're having a little bit of a difficult season, it really forces you to put risk management first. And if you can keep that and stick to that, even in seasons where you're winning 5, 6, 7, 8 trades in a row and having one loss, that'll be really what drives you to those bigger accounts and allows you to manage larger money. Because again, 1% of $100 is the same as 1% on $1 million, right? It's the math that counts. It's the rules that count that gets people to the end of the day. Now, again, if you're part of Premium Plus, we do have our session this afternoon. We'll be starting at 3:15. In 15 minutes, I'm going to break down, give you all the history of NFP, all the past results, what's likely to happen, my predictions and my setup. I may be doing some pending orders this afternoon just to catch in the event we get that strong of a dollar, in the event we get that shock, oh wow type of moment. So I'll be sharing with you those particular moves. But if you're not part of Premium Plus, again, we will still post some trades into the environment. It's been a difficult trading season. However, we have our AUD pairs that are running a good profit. We've hit TP1 on both of our AUD pair trades, and the one pair is running at almost 80 pips of profit. The other one's running at another 20 per position after that TP1. So there's some light at the end of the tunnel. However, once we get through this trading week, we can start to fly. All the data points to the fact that this is a normal event. I just missed the fact that there's generally stronger dollar data, right? So maybe me being caught up in the holidays, whatever it may be, I don't necessarily know, but we're in for a really good ride. Outside of that, guys, you know the drill. This Saturday, we have our first mentorship meeting, right? That's going to be at lunchtime at 12 o'clock. You need to be a Premium Plus member and you need to have a TDM live account. So you can open up a live account down below the link, verify FICA, fund it, and then you'll get access into that mentorship program. 12 o'clock this Saturday, right? If you miss this one, the next one is at the end of the month, and that's going to be a little bit of a longer session. We're going to be taking a couple of hours together as we break down the month. We break down individual trading. You can submit your trading journals to me, and we'll break down the data, where you've missed, where you've hit, where you need help with, etc. Beautiful, guys. Outside of that, it is Friday. Hope you guys have an amazing day. It's again the start of a brand new year, a new opportunity to change lives, to do amazing things. So go out there, get it, stay strong. And until I see you a little bit later, you know the drill. Be safe and trade safe. Goodbye.